Welcome back to Investing Talk podcast. Today we're diving into Quantumscape. They're a company really trying to push the boundaries in the electric vehicle space, their focus. Developing what many are calling next-generation batteries, solid-state lithium metal batteries. And the goal here is pretty ambitious. They want to tackle the big limitations we see with current lithium-ion batteries. We're talking potentially much faster charging, higher energy density, more range, longer lifespan, and crucially, improve safety. Now, the core of their innovation, the real heart of it, is this patented ceramic electrolyte separator technology. So current EV batteries mostly use a liquid electrolyte. It works, but it can be flammable, takes up space. Quantumscape wants to replace that with a super thin, solid ceramic layer. It's non-flammable, which is a big safety plus. But it's more than just safety. This solid separator is what lets them use a pure lithium metal anode. And that's where the potential huge leap comes in. This setup might deliver, well, maybe up to 10 times the energy density of what we have now. Just imagine, maybe an EV driving 1,000 miles on one charge, or your phone lasting days and days. That's the kind of performance boost they're chasing. So our mission today is to really unpack that potential, look at the progress they've actually made, and also take a hard look at the hurdles, the big challenges still ahead before this becomes, a real commercial product out in the world. And before we go deeper, if you find this exploration helpful, please do consider subscribing, liking, maybe leave a comment. Your support really helps us keep bringing you these kinds of in-depth looks. And hey, if you feel like going the extra mile, you can always consider buying us a coffee. The link's usually in the description. Okay, let's really zoom in on this vision. Quantumscape, they were founded back in 2010. So they've been at this for a while, focused squarely on solving these big battery problems. Their whole identity is built around perfecting that ceramic separator. That's the key, they say, to unlocking lithium metal anodes. And the promised benefits, like we touched on, they sound game-changing. Massively higher energy density, more power, less weight, less space, potentially 10 times more, which is wow. But also aiming for super fast charging, much longer battery life, and definitely that improved safety by ditching the flammable liquid.
It is fascinating, the position they're in. They're absolutely aiming for that first mover advantage in automotive-grade solid-state tech, to be the first, or among the first, publicly traded company to really crack this for cars. But their market position right now, it's still largely based on that promise, on the potential. It's not just being pre-commercialization. It's the huge leap, the chasm between lab success and actually building these things reliably in a gigafactory. Translating brilliant science into scalable, cost-effective manufacturing. That's historically where many great ideas stumble. So the promise is revolutionary, no doubt, but the path to actually getting there, to dominating the market, it's incredibly complex, both technically and financially.
That's a really crucial point, because when you pivot from that exciting tech vision to the actual financials, well, it paints a very clear picture. This is a company still very much in its early R&D intensive phase. For instance, they're essentially pre-revenue. Q1 2025, minimal, maybe no material revenue reported. Their earnings per share for that quarter was negative $0.21. Reflects ongoing losses, right? Which makes sense. They're pouring money into research development, getting the tech ready. And because of those negative earnings, you can't calculate a standard PE ratio. It just doesn't apply. Return on equity is also negative. They've also had consistently negative free cash flow. That's just the reality of the cash burn from R&D and the capital expenditures, building factories and equipment. In Q1 2025 alone, their adjusted EBITDA loss was $64.6 million. But here's the other side of the coin. They actually have a very strong liquidity position. Current ratio is high, 14.21, and very little debt on the books. So that gives them a significant financial runway, some stability despite the losses, and of course no dividends. Every penny is going back into growth and development.
Right, and that financial profile, it's completely typical for this kind of company. Early stage, tech-focused, heavy R&D, capital-intensive industry. The fact that they have much more cash than debt is frankly critical. It buys them time. It gives them that runway to keep developing without facing an immediate funding crisis. However, that consistent cash burn, it's substantial. It absolutely raises questions about the future. If getting to commercial scale takes longer or costs more than planned, they'll likely need to raise more capital, and that often means potentially diluting existing shareholders. Issuing more stock, which can reduce the value of current shares. It's that classic investment gamble, right? Spend big now for potentially massive payoff later.
Exactly. So keeping that financial picture in mind, let's talk about recent events, because there's some pretty big news that definitely caught the market's eye. On June 24th, just recently, Quantumscape announced a really significant milestone. Their proprietary Cobra separator process, it officially entered baseline production. Now, that might sound technical, but it's a potentially huge step. Cobra is the process behind their high-throughput, continuous flow manufacturing for the separators. Think moving from, say, lab scale or pilot scale making of these things to something more like a streamlined production line. CEO Seva Sivaram highlighted this is about improving throughput, making more separators faster, and reducing the factory footprint, both absolutely vital for making these things at gigafactory scale cost effectively. And the market reaction was pretty immediate, quite strong actually. The stock jumped nearly 30% in after-hours trading that day, went from around $4.38 to $5.62 pretty quickly. So that clearly signals renewed optimism from investors, maybe a feeling that they're making real progress on the manufacturing front. And it's not just Cobra, they've reported other progress too. They shipped B0 prototype cells using their older Raptor process to customers for testing late last year, early this year, and they plan to ship more advanced QSE-5 samples later this year. Plus, they announced a potential strategic partnership framework with Murata Manufacturing. Murata's a big name, an established electronics supplier. So a collaboration there could be seen as a really important validation from the industry.
Yes, the market reaction to Cobra was certainly noticeable, very enthusiastic, but you have to ask, right? Does this milestone entering baseline production for Cobra really mark a true turning point? Does it signal a clear, unavoidable path to commercial success? Or is it another positive development, definitely good news, but still just one step on what's likely a very long, complex, and uncertain road to full commercialization? Because achieving baseline production for a key component, while a major engineering achievement, is still quite different from mass-producing fully validated battery packs that automakers will actually put into EVs. We've seen prototypes ship before. The real test is scaling that up, consistently, reliably meeting automotive quality standards and hitting cost targets. That gap is still significant.
That's a very critical distinction to make. So, putting it all together, what does this mean for Quantumscape's place in the wider battery market? The overall industry trend is definitely in their favor. Demand for EVs is surging globally, and automakers are actively, intensely looking for better batteries, next-gen solutions. So those are strong tailwinds. Now, if you compare them to others, well, you have other pure-play solid-state companies like Solid Power or SES AI. They're largely in a similar boat, mostly pre-revenue, still loss-making, working through scaling challenges. Solid Power is also sending out pilot samples. But then you have the established giants, like CATL. These are massive global suppliers, already have deep partnerships with automakers. They're also investing in new tech, including solid state, but they don't offer that same kind of, let's say, pure play bet on a revolutionary chemistry leap that Quantumscape represents, a different kind of investment profile.
Exactly. And building on that, we really need to be clear about the major risks Quantumscape still faces, despite the promising tech and the Cobra news. First, that persistent pre-revenue status. Founded over a decade ago, still haven't proven commercial viability at scale. That long timeline can definitely test investor patience. Second, the ongoing cash burn we talked about. It's significant. The strong cash position helps. It provides that cushion. But continued losses mean future fundraising is likely, which brings back that risk of shareholder dilution if things take longer than hoped. Third, and this is a big one, execution risk. Scaling up brand new manufacturing processes like Cobra, it's incredibly challenging operationally. It's one thing to make it work in controlled conditions, another to do it consistently, cost-effectively, at massive volume in a real factory environment. Delays, cost overruns, technical setbacks are all possibilities. It's often the hardest part. Fourth, the timeline for actual adoption by the big automakers, the OEMs, is still pretty uncertain. Qualifying batteries for cars is a long, rigorous process. Years, sometimes. OEMs need absolute proof of performance, safety, reliability, and a secure supply chain before they commit. Fifth, the competition is fierce. It's not just other startups racing alongside them. It's also the huge incumbents. Panasonic, Samsung SDI, LG Chem, CATL, they're all pouring billions into their own solid-state research and other advanced battery chemistries. They won't give up market share easily. And finally, you see some skepticism reflected in analyst ratings. While some see the upside, the general consensus rating seems to be around hold. Some analysts have even trimmed price targets, citing the uncertain earnings outlook and the long road ahead. Even if you look at social media, you see that split. Real excitement about breakthroughs, but also persistent skepticism about when or even if this tech will make it into mainstream cars affordably.
Okay, so we've covered quite a bit the really incredible promise of Quantumscape's solid state tech, that potential for a huge leap. We've looked at their financial situation, very much an R&D focused pre-revenue company burning cash but with a solid balance sheet for now. And we discussed that recent Cobra milestone entering baseline production, which certainly gave the stock a boost and renewed some optimism.
And tying it all together, QuantumScape clearly remains this early-stage innovator with, yes, truly significant technological potential. That's undeniable. But it also faces very substantial, multifaceted risks, particularly around execution, actually making these batteries at scale and cost before it can achieve profitability. And that profile, that challenge, is pretty much shared by most of the pure-play solid-state battery companies out there today. It highlights just how tough it is to bring this kind of transformative tech from the lab to the real world.
So for you, listening in, what's the main takeaway here? That recent stock surge after the Cobra news, was that really an inflection point? Does it signal a clear path is opening up towards commercial reality? Or is it maybe another exciting moment, another data point, but still part of what could be a very long, costly, and uncertain journey towards large-scale adoption and actually making money? It's a really compelling case study, isn't it? Watching this journey from the R&D promise to the gritty realities of manufacturing scale-up, we definitely encourage you to keep a close eye on their upcoming milestones, particularly anything related to customer testing results, qualification progress with automakers, and actual manufacturing ramp-up news over the next year or two. That's where the next big tests lie, proving they can scale this consistently, affordably, and get it into actual vehicles rolling down the road.